It's about that time of day again. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. It's Thursday evening, September 15th, 2016. We're getting ready to wrap up the week of this quadruple witching with some great opportunities setting up for Friday's trading session. Crude oil and euro are both trading inside of ranges this evening. Gold is bearish coming off the highs of a channel, and the S&P is bullish, but giving the bears a huge window to take price lower back into the battle zone in tomorrow's trading session. I've got a great newsletter in store for you guys and gals tonight. Plenty of tradable opportunities tomorrow for Friday's session. But of course, as you always know, before we jump into our charts though, don't forget, the only place to watch the full-length version of this video is on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. Follow that link, come over here and join the blog and watch the full-length version. While you're here, don't forget to join the newsletter mailing list. I'll send you an email every evening when our nightly newsletter goes live. Download all the charts in tonight's video below the video tonight. Follow that link right below the video on the blog to download all the charts and have them ready for your own trading tomorrow. Also, in the upper right-hand corner, don't forget to grab your free pass. If you're not a member here at School of Trade and you'd like to grab a free pass, come out and test drive what it feels like to be in our trade room. Grab that free pass in the upper right-hand corner. And as I always remind you, don't waste any time on this. You're going to learn more with me in 1 week than anywhere else on the interwebs. Register as a trial member and learn the who, what, where, when, and why we are considered to be the industry standard in day trading education and professional grade trading strategies. Oh, and one more thing too, don't forget, I'm always standing by here to help you guys out 24/7, 365. Hit me up on the live support button on the right-hand side of the website. There's also a button on the homepage website at SchoolOfTrade.com as well. Hope you guys are having a great week. Boy, it's been an incredible quadruple witching week, the third week of every 3 months. That is March, that is June, that is September, and that is December. This is always a wild one, this September quadruple witching. It's definitely one for the record books. We definitely have some big opportunities coming tomorrow. No major news tonight. No major news tonight out of the Asian session. Tomorrow morning we'll be in the London session in our chat room, opening up at 3 a.m. No news in the London session tomorrow. And of course, we'll be going right into 8:30, 10 o'clock. And then this oddball here, the Treasury International Capital, the tick flow report tomorrow at 4 p.m. We're not going to worry too much about that report tomorrow because, of course, tomorrow is a Friday. You could almost treat tomorrow much like a holiday Friday or a summer Friday. Early in, early out. It is usually going to be pretty thin after 10:45, 11 a.m. Eastern time. On any Friday, you got to be careful in the afternoons. But, of course, being a quadruple witching Friday, we've talked about this. Today and tomorrow are really the days when we're expected to see that self-fulfilling prophecy really kick into high gear. So be aware of that. No news overnight tonight. No news tomorrow morning in London. It's all crammed into the U.S. session tomorrow morning, 8:30 and 10 o'clock, which in all reality is really a great kind of spacing out of news. We'll get us started tomorrow morning in the trade room at 8 a.m. Eastern time with all of our advanced members. And we'll usually be on Fridays, usually finish up about 10:45, 11 o'clock as far as getting into any new positions. You're more than welcome to hold positions into the close on Friday, right? But please be careful with that low volume, right? Low liquidity environment we see on Friday afternoons. Don't forget, we'll be in our chat room tomorrow morning as of 3 a.m. for the London session, as of 8 a.m. tomorrow morning for the U.S. session in the trade room. We look forward to seeing you guys there. Got a couple ranges here tonight to talk about. You guys will be experts on those ranges. Crude oil is range bound and trying to complete rotation back to the low of the range tomorrow. The big concern right now is that we're trading in the middle of the range, which means the price action will be very choppy and sloppy and low volume. So the best option for tomorrow is to stick to the edges of the range, selling the high with buyer failures, buying the low with seller failures, and using the old pendulum swing to plan for targets until we see a breakout that can hold. Really, the only big concern right now is right in the middle. Right in the middle. The buyers, of course, buying off the lows, sellers, of course, selling off the high, and we're expecting, just like any range, to get range rotation from the low to the high, high to the low, low to the high. And then, of course, we're expecting to get right back down to those lows. What I've done now is I've kind of highlighted the 33 to 66 area right in the middle of this range. Think of that as your no trade zone. We're going to take a look at this also on the euro tonight. But think of that as your no trade zone. I want to buy the low with seller failure. I want to sell the high, right, with buyer failure whenever I see a trading range. Now, of course, I've added on some of these trend lines overhead as well. You'll notice here some of the lines overhead, added on some trend lines overhead, added on some trend lines below. Those are obviously going to be useful, right, but they may not be, right? They may not be as useful tomorrow. We'll have to wait and see if they respond to it. As of right now, though, when I see a trading range, I want to buy low, sell high, stay away from the middle, focus on failures, and use that pendulum swing. So basically, the fact that we're coming off of, and we get a great example of this right now on the euro, if you were to take the amount of the breakout to the upside, let's make that a nice pleasant color there. Bring this right on down, bring that right on down there, and then of course at this point now that becomes a nice healthy area of support, right? So we'll call that, we'll call that 43.13. I do not expect that to be exact, but it will be an area of interest. The hard part right now is if you didn't sell off the high, right, or buy off the low, you're right in the middle right now. So really right now, the hard part's going to be staying away from the middle of this range and waiting for price to finish the move back down to those lows, right? Because right now, sellers are already in buyer failure off the high. To go back down to that low right now is not a very reliable place and time to be looking to sell this market because your stop has to go back above those highs. Another option would be if this price was to try to make a run for that high, buyer failure and back down. You know, we always kind of joke around by saying when it comes to a range, find the best setup and then just look for it to fail because that's usually what's going to happen. So if the buyers try to reverse it, buyer failure to finish off the move back down. But just again, be aware though, right in the middle of this range though is going to be where the most choppy, sloppy, and low reliability trades are going to come. As we go lower, seller failure, right, to buy it back up. And remember, what we really would love to see is, I'd love to see the bears really make a real strong push lower, right? Would love to see a real strong push lower because the stronger they push this thing out, right, doesn't change anything. We're still going to be looking for this price now, seller failure, right, to go right back up. And with the pendulum swing, right, that gives the buyers a nice hefty target going back in the opposite direction. So the amount of the breakout right now gives us an area of interest to the downside. We get a much more dramatic example of that on the euro tonight. And of course, what I hope happens, though, is I hope they completely ignore that, slam through it, give us a nice, big, strong move, and then if they don't hold this one, that gives us a nice, big pendulum swing now, right, to go right back up in the opposite direction. Remember, it won't be until we can get a real strong breakout here for the bears, hold the pullback, and continue with a lower low. That's the only time we can start to even think about trading in the direction of the breakout. Statistically speaking, the most reliable way to trade a range is to focus on those failures, buying those lows, selling those highs until we see that strong enough breakout that can hold outside of that range and give us a new trend to work with. We'll be looking forward to seeing what happens here on the crude for tomorrow. Oh, one more thing too here, I also want to mention that too, is to watch for rollover. We do have rollover on the watch right now. As of recording this right now, it's about neck and neck between the 1016 and the 1116 contract right now. So if we are trading in balanced volume between 1016 and 1116, you can trade whichever one you want tomorrow. But as soon as the volume does creep higher on the 1116 contract, though, we will be looking for that 1116 contract rollover, so be aware of that. Boy, how about that S&P here today? S&P, what is really amazing is that this was all of yesterday's price action, And look at the size of today. It's amazing what one day will do, right, for a market. So very, very big movement here for the S&P 500 today. They got their target down around that 2110. We talked about that in last night's newsletter, and then did not waste any time here running this price right higher again. Even the S&P is bullish and trying to retest the highs tomorrow. There's no doubt about the fact this market is bullish, but the buyers aren't showing us much interest, and there is resistance in the way, which is likely going to give these sellers the short-term window they need to make a run back to test some important areas of interest tomorrow. The buyers have control right now, but boy, after seeing this big red candle here out the gate in the beginning of the electronics session, right, that resistance trend line overhead is giving those sellers a shot at holding the next pullback and sending prices down to 21.30, 26.25, 22 even, and possibly all the way down to that 16, dare I say, maybe all the way back down to retest that low tomorrow. I don't want to get too far ahead of myself, right? But I wouldn't be surprised here if these sellers really get roaring here if we find a way back to the point of that, right, of that triangle at 21.16 here right now. What do the buyers need? Buyers have to show up right now. Buyers need to have a strong breakout pullback above that double up at 21.41, or they need to wait through this pullback and then grab it as it attempts to retest the highs tomorrow. You know, really, as far as I'm concerned right now, there are really two basic scenarios here right now. Scenario one is where the sellers hold this. Scenario one is where the sellers hold this and they get their shot going back into this area here. I see the area around the measured move, an untested, a naked reversal line. Both of these areas here make for a very interesting area for sellers to use as a target. So the first scenario you want to remember here is that with this overhead trend line, right, with that resistance trend line, and of course with the double up overhead, kind of getting in the way. Buyers aren't going to want to buy into that double up. With that, opens the window now. Buyers are worried about buying into resistance, so of course price now pulls back. You could also say the buyers have been fat and happy, right, with plenty of profit for the bulls today, although this is not a reliable kind of train of thought. But, you know, the buyers have had a pretty good day here today, right? After a very narrow range tomorrow, they may be interested in taking some profit on this, right, and seeing where this thing wants to go next. Again, I would caution you against thinking that because the buyers have gone so far, they can't keep going. That's not a real reliable way to think. You know, it's the way a human being thinks, but it's not the way that a trader should be thinking. We think in probabilities, of course. And right now, the probabilities, at least at this moment, are still pinned going back to retest those highs. Now, what can give the sellers an opportunity here? Again, like I said before, I think scenario one is the sellers hold this pullback, right? They hold this pullback and they run it down into this area here, this measured move, right? This measured move, and of course this naked reversal line. We'll call this around that 20.31 to 28 even area, right? From there, this is where we have to expect that buyers are going to start coming in. 21.30, and then again down here, right at this, right in this battle zone. So really right now, the sellers have definitely a short-term opportunity here now, right? Short-term opportunity to hold that pullback, send this price lower. But this is where we're likely to start seeing things get chopped up. Sellers fail. Buyers will have a shot now, right, to then buy it on the way back up. So sellers having the short-term opportunity just really on the back of the buyers just not having enough room to buy high here, right? They're kind of buying into that resistance. That will give those sellers a shot to get down into this measured move and possibly all the way down into that battle zone. I'm not too keen on being a seller down in the area of the measured move area or the area of the battle zone, right? That area, we do expect that to be a pretty choppy range there, but I definitely be looking for, right, the buyers then coming up off of that area and going for a retest of that high. That's definitely one scenario to consider. Another scenario, which would be the buyers can't hold this thing together. Sellers hold it, they hold it, they hold it, and of course, we're now looking for this now to make its move lower. The first and the third are going to be the most reliable ways to trade this. Again, like I said, I'm not too keen on buying, on trying to sell into the battle zone here, just because you've got that untested measured move, that untested reversal line at 28. So I would imagine that's probably going to be where you're going to see a lot of that, right? A lot of that chop and slop here tomorrow. So sellers, get to it quickly here. Make sure they hold the pullback and then